Good morning, friends. Welcome to SBI Securities Morning Podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade yesterday, Nifty witnessed profit booking post the sharp rally witnessed on Monday and ended the day down 0.99%. It was mainly on account of profit booking which was seen in counters such as Reliance, Bajaj Finance and Ultra Chemco. Bank Nifty outperformed for the day as it declined by 0.16, trading in an extremely tight range. Coming to the macro factors, the dollar index is currently consolidating in a range of 103.8, 103 levels, while the US 10-year bond yields have stabilized at 4% ahead of the all-important and most awaited Fed meet outcome scheduled tonight. Meanwhile, Brent crude has steadily inched up to $82 a barrel following the Red Sea issue. A quick check on the global markets. The S&P 500 yesterday witnessed a continuation of the consolidation at higher levels ahead of the FOMC outcome. And looking at the larger picture, however, the trend continues to remain bullish, and until it remains above the levels of 4,830, it can trend towards the levels of 5,000, 5,080 on the upside. While below 4,830, the next support is placed at 4,680, 4,700 levels. Coming to Nifty, going forward, the resistance for the index is seen at 21,720, 21,750 levels, while support on the downside is placed closer towards 21,300, 21,330 levels. In case 21,300 is breached, the index could witness further selling pressure towards 21,150, 21,100 levels on the downside. India VIX has closed at its highest levels in over 10 months. We expect the volatility to further increase up to the levels of 17.5, 18.5 zone in anticipation ahead of the FOMC meet outcome and the union budget. The impact of both these events will be witnessed tomorrow for our markets. Looking at the OI data, strong put writing is seen in 21,500, 21,400 strikes, while 21,600 and 21,700 calls have seen aggressive writing. Overall, the range for the coming few sessions could be 21,300 on the downside and 21,750 on the upside. Coming to Bank Nifty, going forward, the zone of 45,600, 45,700 is likely to act as a resistance, while support is seen at 44,900, 45,000 levels. In case 44,900 breaks, the index can retest its next support placed at 44,500, 44,600 levels. Tracking the OI data for Bank Nifty, significant open interest built up is witnessed in 45,500, 45,600 calls, and on the put side it is majorly seen in the 45,000 strike, implying a range of 44,900 on the downside and 45,700 on the upside for the coming few sessions. The most noteworthy companies who would be announcing their results today are Maruti, Sun Pharma, Jubilant Food and Ambuja Cement. So these are the heavyweight counters which would be announcing their results in trade today. The stocks and sectors which are showing a bit of momentum at the current juncture. So we have the oil and gas space which is showing traction. The likes of BPCL, Oil, MGL, Hind Petro have displayed uptrend on their respective short to medium term charts and continue to look positive. From the broader market, if we see, bullish setup is observed in Power Grid, IRB, Birla Corp, Amber, Trident, Indian Bank and Bank India. Coming to the FII DI data, in the cash segment, FII sold to the tune of 1,970 crores, while DIS bought to the tune of 1,002 crores. FI long short ratio for index futures has again worsened to 24.03 on a net basis as they sold about 836 index futures. On the stock futures front, FIs have sold to the tune of 2,433 contracts, while on the options front, FIs sold 1,208 call contracts and bought about 22,752 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.